Hello and welcome to Live Tutorial Tuesday. We were going to be working a problem today. The problem will be related to the journal entries and QuickBooks. We're going to start off with those starting journal entries, the starting journal entries that basically any company is going to have to do. And we're going to look at it through a theory aspect as well as with a... hold on just a second. Okay, so we're going to take a look at it through QuickBooks, and we're going to take a look at it through the adjusting entry process. And so the two aspects of that will be the theory, and then we're going to put it into practice in terms of QuickBooks. So in order to see what we're going to do here, we have the objectives. Objectives will be to record and post startup journal entries. We're then going to enter startup data into QuickBooks. So we want to look at the theory of it and then put it into QuickBooks. Idea being that when we look at the theory of it, whether we talk to students or if we talk to people that are in the industry, we often get the same thing when we're trying to link up the theory of what are debits and credits, how do you record journal entries, and practice, which people often use accounting software, a software such as QuickBooks. And when that question comes into play, then we have to think about how are we going to relate the two. Students are often thinking, well, I'm doing a lot of work and I'm kind of taking it on faith that it's going to apply to the software at a later time. It does, but it does take a while to take that on faith to get there. And people that are in a small business often think that, they may have worked with software, they may have worked with QuickBooks or other software and learned basically accounting and a lot of functions that are useful without knowing much about debits and credits. And they often think, well, how does this apply when you use software from the other end of it? So they have the same kind of questions related to debits and credits and how does it apply to software. And the traditional way that we look at things is we're going to do the theory from a student standpoint and then apply it to the software. But we're going to try here to do the two things at the same time so that we can see how they relate, concentrating mainly on the theory and then putting it into the software so that we can see how that applies too. So we want to learn a few things here. We want to learn how to use Excel, how to use Google Sheets. Those are two things we may as well learn as we go because those are going to be things that are very important to almost any aspect of the business. So we want to basically look at how to use Google Sheets, how to use Excel. Accounting is the perfect thing to do that in. Why do we need to know those things? Because just about anybody uses a database program. And when we download things from the database program, then it's really useful to sort that information. So whether we're in sales, whether we're in the accounting department, whether we're in marketing, we're probably going to be working with some type of database program, some type of customer data, some type of employee data. And if we can download that data, sort that data, very useful. So learning Excel, just the basic functions of Excel in accounting can be very helpful for a lot of different areas in applying those skills as well. Then we have some basic formulas we're going to learn within Excel as well. All right, so let's go out here and take a look at what we have. I'm going to check a few things before we go further. So I'm going to put up a comic here as we get started. All right, in terms of what we will be using, we're going to have a worksheet here that we will be using. The worksheet, the QuickBooks file, as well as a file that is a Google Sheets file is available to work through the problems. So if you want to work through them now, you can. I suggest doing that. If you want to work through them at a later time, download some of this stuff, mainly the worksheets. I'm focusing more on the worksheets than the QuickBooks file right now. And I know not everybody has the QuickBooks file. So, and then at a later time, you can go back to this and we can work it again at that time as well. So let's see the files where they're located. If you go to the Google Sheets, this is Google Sheets. If you click the link in the description in the bottom, you'll see one link that will take you to a web page that will download the Excel sheet just during the presentation. If it's after the presentation and you want the link, then give us your email address and we'll see if we can get you that link. The other link will go to this sheet, which isn't Excel. This is Google Sheets. Google Sheets is free, so it doesn't have near the amount of capabilities as Excel, but whether you are an expert in Excel or not, if you don't even have Excel, then Google Sheets is really good to supplement your Excel usage, and or if you don't have Excel, great thing to have. If you open this up, you can go to Files and you can copy this sheet to your documents and then work through this with the problem. If you want to work through this live, we can have multiple people in this sheet as well. So if anybody wanted to work through this sheet as we go, we're welcome to do that. We can actually complete this as we go. I'll be working with the Excel sheet, but the functions will be much the same, and you can take a look at the similarities and differences. One of the advantages with the Google Sheets is that you can share it a lot more readily. So I'm going to minimize this and take a look at QuickBooks. QuickBooks is going to be here. I uploaded a backup file for QuickBooks. It's a 2016 file. If you download it, then you're going to have to restore it to a 2016 or a later version of QuickBooks. It's the desktop version. I realize that not everybody is going to have QuickBooks, and again, I don't expect everybody to do the QuickBooks side of it. What I really want to show here is just how the basic startup journal entries can be done with just debits and credits kind of by hand. That's what we're representing in Excel. And then how that same thing is really being done in the database program, being QuickBooks. What types of things do we need to know? What types of things are the database program going to basically eventually take over in terms of accounting? And what types of things do we still need to know? And it's similar to thinking about a calculator. There's an idea that there's going to be some jobs that are going to be basically taken up by things like computers, like the calculator here. For example, I know that if I put in, 88 times 24, I have no idea what the outcome is going to be. But if I look at the outcome, I can then say, that makes sense. I kind of know what's happening here. I can make a decision on what that outcome is. I need to know what the inputs are and how this thing is working so that I can make sense of the output. If that output came out to be like 2, then I would have a pretty good idea that something went wrong. And these are types of things we need to know in terms of our adjustments. The data entry, there's always going to be some data entry point no matter what type of computer we're going to use. And there's always going to be some kind of interpreting process on how to set the system up and how to, of course, interpret the system. And that's where we want to get into play here. So computers will do a lot of things within accounting, and there's going to be a lot of things that we're still going to need to have some theory on to think about. And those things that we need to think about are really the areas that are becoming more and more important. All right, so let's go through this. We're going to work through this in Excel. We'll do this side by side. We're going to do each journal entry through Excel, starting with the startup journal entry with an owner investing. Hold on just a second. And then we will put that same data as we go into QuickBooks each time. This Excel worksheet, it's going to be set up. It's very nice. It's a very nice Excel worksheet here. We've got the data. This is going to be the general journals going to be put in on this side over here. Then we're going to post those to the general ledger. I know that looks really intimidating, but we'll do it one step at a time. If you jump in late, that's okay. We can still put this information in there one step at a time and see how it links together. And obviously you can rewind and go back and see what we have done as we go as well. So once we post it to the general ledger, it will then populate the trial balance automatically because of the cell references. If you do download a worksheet, you'll notice that some of the cells are locked. The reason for that is we're trying to lock the cells that have formulas in it, so you don't do anything to the cells that have the formulas in it. That's going to be the objective of that. Once we do that, then we'll take this information and we'll put it into QuickBooks, and we'll see that the trial balance will generate basically the same thing, hopefully, if we do it right, if I do it right. And that will be the goal here. So the data we're going to enter just some startup data. We're going to just say that we're a service company. We can say we do bookkeeping or any type of service. We're not selling inventory. We'll talk about inventory, hopefully at another problem. And we're going to say the owner invests cash. That's going to be the first thing we're going to do. We want to keep the owner investment separate from the business investment. Even if we're a sole proprietor, have a separate checking account. That's one of the first things that we'll hear when we set things up. And so, therefore, I'm going to go through a list of questions every time we do a transaction, just to not fall into any pitfalls with transactions. And I'll try to point out some of the pitfalls people often fall into when we do transactions. So first I'm going to ask, is cash affected? Why? Because cash is affected. Most transactions, like 70% of the transactions, have cash in it, and it's easier to know if cash is going up or down. Therefore, if we know what cash is doing, that will help us to know what the other account is doing. So I'm going to say, is cash affected? We're going to say, yeah, cash was paid to the company. Next question, is cash a debit or credit balance? Well, we can see up here in the trial balance, cash is up in the asset section. I'm always going to point to the trial balance. I always recommend having a trial balance open. It's a great cheat sheet to have. It's an asset. Assets generally have debit balances, and we need to make it go up for the business because the business got more cash. Therefore, we're going to do the same thing to it, which in this case is another debit. Now, I know that's a long set of questions, but I'm going to go through those each time just in a more quick way, but just to go through those set of questions to avoid some kind of shortcuts that people start to memorize sometimes that don't work all the time. Okay, so that's the first thing we're going to do. In terms of QuickBooks, I'm going to put the date in here first. So I'm in cell B5. B5, I'm going to type the date, which is 5/1. Now, because I formatted the cells to dates, it'll format as a date. I'm not going to put the year in there right now. I formatted it just to 5/1. And then we're going to put the account. Now, I could just type in, I'm in cell C5, that's what Excel calls it. And we could just type in cash here. And notice now I'm in the cell rather than on the cell. And you can see that by everything being blanked out up here. If I hit enter, everything's now back in and we can do anything. That means that's a difference between in the cell and on the cell. I also want to say that we could do this by copying and pasting, and that's what I'm going to start to do just to limit myself from making spelling errors and also just to learn Excel here. So I'm going to say this is the account I want to post to. I'm going to right click on the account, or however you copy it if you're on another machine, another type of device. This is obviously a Windows device. And I'm going to copy this, and we're going to go over here. I'm in cell C5. I'm going to right click. And I'm not going to paste it normal. I'm going to paste it just the values only so that we keep that blue cell there, that nice blue cell. So there we have that. Then we're going to say that the number is going to be 50,000. Now when I type this in here, I'm in cell D5. I'm going to type in 50000, just like that. I'm not going to put any comma or anything like that. Why? Because the formatting of the cell will take care of that. Note that before I enter anything, again, everything's all grayed out up here, because we are in the cell rather than on the cell. Once we hit enter, now we're off the cell. It formats for us. It puts the comma in there and everything. We know that if we have a debit in terms of accounting, we're also going to have a credit. Every transaction is going to have one debit and one credit at least. I'm going to represent the credits with a negative number, a negative 50,000. Now again, I'm going to put negative 50000. And when I hit enter, it's going to format it differently, meaning it's going to put brackets around it. Why? Because Excel, I formatted the Excel to show negative numbers with brackets. Now, I'm not trying to equate negative numbers and debits and credits. We are going to use credits or negative numbers as credits to help with the formulas. And this is going to be very useful. It's useful in this type of worksheet. It's also useful in many types of public accounting worksheets when we do the adjusting entry process. So no matter what we do, we got to differentiate in our mind what a debit and a credit is and what a plus and minus is. But they're also kind of related because we're going to use plus and minus in working with debits and credits. So no matter what you do, with debits and credits, you're really going to have to try to differentiate yourself, thinking of what a debit and credit is, what plus and minus is, how do we use adding and subtracting towards debits and credits, how do you do that? Repetition. We will repeat this many times. It will be great. All right, so now we just need to know what the other account is here. We put money in. Who put it in? The owner. Put in cash, debited. What's the account that will be credited? Well, if we look through our chart of accounts, we can say, the owner put in money. Which one should it be? How about the equity section, which is the blue section? It's in order: assets, liabilities, equity, and then income statement, revenue, and expenses. So we're going to take the equity section here, and we're going to take the owner's capital. Owner's capital. So I'm going to copy that. I could type that, but I'm in cell L15, right-click, and copy. And I'm going to put that in cell C6. C6, it's right there, C6. It's called C6. And I'm going to right-click and paste it 1, 2, 3. So there's our journal entry. We debit the cash, we credit the owner's capital, and I'm going to put the negative in for cell reference purposes. Then I'm going to put my cursor on C6, and I'm going to indent it just for formatting purposes. The way to do that is you go to the tabs up here. This is the home tab. This is the alignment group. This is the indenting. I don't know how to do this on Google Sheets, but if you don't do it, it's not a big deal, but it looks a little bit nicer with the credits being indented. All right, so there's our journal entry. We are now going to post that to the general ledger. This is the general journal. This is the general ledger. The general ledger is in the same order as the trial balance, the chart of accounts, and it's going to show the detail. So we're going to be here in cash. That's our first account in the general ledger. That's what we want to post this $50,000 to. It's on the debit side. We will then be on the debit side right here in 09, and we're going to say that that equals, pointed to this $50,000, and enter. So notice what happens here. The formula takes it from 0 up to by 50 to 50. So a debit makes the debit account go up. We're doing the same thing to it, bringing it up to 50. It also puts that 50 here on the trial balance, and it shows that that's the only thing in the trial balance. Therefore, the debits don't equal the credits. Why? Because we haven't posted the capital account yet. So now when we post the credit, those red things should go away. So I'm going to post the credit. Now it's a little bit harder. It's going to be down here. It's the first blue account, same order on the general ledger as the trial balance. Therefore, I'm going to scroll over here, assets, liabilities, there's the equity. We want to be here in AF9. Now again, I could type in negative 50,000. Don't do this because I don't want to do it that way because I want to use references. You could do that, but if you run into problems, you're going to have more issues finding where those problems are. So I'm going to delete that, and I'm going to use a formula. So I'm going to say this equals, and then I've got to go all the way over and just point to with my mouse or with my arrows. I'm using my arrows here. And notice it's changing the cell. That's okay. It's not going to freeze the cell till I get where we want. So I'm going to say I want to get to there. Or we can just point to it with my mouse here. I want that one. And so I'm going to say enter. And there's the 50,000. Again, we could just type in negative 50,000. We could also type in equals E6. And some people that have really good eyes, when we have to maneuver the screen like this, like to make the screen really small like this. And that works too. Notice if you make it really small and you get these marks here, that just means that Excel's too small to see the screen. If you widen the cell, then you'll be able to see those at some point. All right, so I'm going to maneuver the screen though because my eyes are bad, and that's the way I would prefer to do it generally. So there is that, and if we go back over the trial balance now, we see the 50,000 in cash, we see the 50 from equity. Now again, what does it mean that the formulas help us to do this? Notice if I see this and if I was out of balance and I want to test how that came about, I could go to the cash here, I can go to the data and say, is that posted? And we could say, let's go to the formulas tab up here. And then we're going to go to the formula auditing and hit the second button, trace dependence, and it's going right there. There it's posted, and there it's posted. If we just typed those numbers in, we can't see that, And if we want to see where this number is going, then formulas tab, and we can trace to the dependent here, okay? And then this is going to there. So it's all connected. If we just hard code everything, then we can't see those connections. So the more connections we can make, the easier our lives are when there's a problem. All right, and now we're going to do the same thing in QuickBooks. Now again, I know not everybody has QuickBooks, but this is just going to be an idea that, look, the QuickBooks is going to be the same thing in essence here. So we're going to do the same type of thing. I am in the check register right now, so it's going to be a similar register than your checkbook that you would have. We're going to enter not in terms of debits and credits. QuickBooks tries to avoid debits and credits because it's trying to make data entry in a way that people that don't really understand debits and credits can just enter data. But we need to set it up in order to do that. So I'm going to put in 5-1, and we're going to say that this is a deposit. I'm just going to put deposit, and I'm going to say owner is the one that put it in there. I won't put any name at this point. Quick add, it's going to be other because it's not a vendor or a customer. And we just need to put it in the deposit. It's not debit and credit. It's a deposit in this case, $50,000. Deposit means that we're going to increase cash because it's the checking register. And so that's going to be a debit to cash. Then we need to tell QuickBooks the one other thing we might not do with the checkbook, which is what is the other account that we need to put this to. And in this case, it's going to be the owner's account. And if we hit the drop down, we can see that it could be the owner, the opening. Now let's put it into the equity account. We'll put it into equity. All right, and we could put a memo on it, but I'm not going to put a memo. We're going to just do it as simply as possible. And okay. Well, let's do that again. We're going to say yes, okay. All right. Then if we go to the trial balance, I just generated the report here. So I'm just doing the report, and the trial balance gets generated automatically. Just from that data input, we see the debit to cash, the credit to equity. We can see that that's the same thing we have on the trial balance here. It's just that we have a bunch of other zeros. QuickBooks doesn't put zeros into empty accounts. It just eliminates those accounts. So that is that. And we can look at the other reports we typically look at in QuickBooks. Most people don't look at a trial balance. Only the accountants look at the trial balance. But we could look at the profit and loss, and we can see that there's nothing there yet because it's our $50,000. We didn't earn it. And then we put in the balance sheet, and we have the same thing, $50,000 on the debits. Therefore, assets equal liabilities plus equity because it's also owed back to the owner, and we have that represented in the accounting equation up here, assets equal liabilities plus equity. Okay, so let's do the next transaction, and we'll go through this a bit faster each time as we go. So we're going to say the next transaction. Let's pull that up. I'm going to go ahead and highlight this green and say that's done, kind of like checking it off here. Next transaction. Purchased equipment for cash, 5-year life, and it's from Home Depot, I think that's going to say. Let's make that a bit larger. There it is. Okay, so we're going to put that on the books. Now again, the same question here, is cash affected? And we're going to say, yeah, cash is affected. Hold on just a second. Okay, so we purchased equipment. We're going to say, yeah, cash is affected. We paid cash for the equipment. So that's the first thing we need to know. And we're going to say, okay, cash is an asset. Assets have debit balances. We need to make it go down this time. Therefore, we're going to do the opposite thing to it, which in this case is a credit. It's a debit. To make it go down, we do the opposite, which is a credit. So we're going to go over here, and as of the date of, what was it, 5/3, we're going to put the credit on the bottom. So I'm going to take cash. I could just type it in there, but I'm going to copy it. I'm going to go to cell C and then 9. C9, it's right there. C9 is the name of the cell. I'm going to right click and paste it, not normal. I don't want it green. We're going to paste it 1, 2, 3, values only. So there we have that. I'm going to go ahead and put the number in. We paid $18,000 for it. I'm going to put it with a negative 18000. No formatting, other formatting than that. When we hit enter, Excel references or formats it for us with brackets. Then I'm going to go up here and I'm going to put the same number, because if we credit something and there's only 2 accounts affected, as there are here, we're going to debit the same 18,000. So there's the debit for 18,000. Now we just need to know what the debit account will be. So let's go over here. What's going to be the debit account? We bought equipment. If we go through our trial balance and look through the accounts that we could have, we might think that it should be an expense, but it's really going to be up here in the asset section because we haven't consumed the equipment yet. That's going to be the difference between the equipment and an expense, something that's going to help us generate revenue in the future. We're going to put on as an asset, and we're going to expense it as we consume it in accordance with the matching principle. Rather than if we purchase like small tools, we might just expense it at the time we purchased it, assuming we will be using them to help generate revenue in a short period of time. So I'm going to go ahead and copy this, and then I'm going to put it in cell C8, right click and paste it to 1, 2, 3. And then again, we could format this credit by going to the Home tab, the Alignment group, and indent the alignment. All right, so now we're going to post this out. So we have the office equipment up here. We can see that that is going to be 1, 2, 3, 4, 5, 6 accounts down. It's going to be the same for the general ledger. So I'm going to go to these accounts over here, cash, accounts receivable, and we're looking for equipment. There is equipment, and I'm in cell W15. Now I could just type in the 18,000 right there, but I want to use the formulas. So I'm going to say equals, and I'm going to scroll back over here and point to this 18,000 there and enter. So there we have it. It's been input. We can see it here going up in the general ledger. We can see it here going up in the trial balance, and we can see that we are out of balance. Next thing we're going to have to do is credit the cash. So we're going to credit the cash. I'm going to go over to the general ledger. Here's cash. We want to go to the next cell down. I'm in cell P10. So we're going to say that equals and point to the 18,000 in cash. What's going to happen when we hit enter? Well, that's a debit of 50. That's a credit. Those are opposites. Therefore, the 50,000 balance is going to go down by 18 to the 32. And we can see that that same 32 is right there. There's that 32, and that's also back in balance. Now let's do the same thing for QuickBooks. We're going to go over to QuickBooks. Going to do this as much as we can by the check register, so we can just see it as quickly and plainly and simply as possible. And we're going to enter this same information, starting with the date of 5/3. And this, I'm going to put a check number. We're going to say we're starting out with check 111001. All right. And we wrote the check to, and we're going to say, I'm going to make sure I don't mess up the name as much as possible. So there's that. Now, when we hit tab, QuickBooks says, hey, we don't see that name. Do you want to set that name up? We're going to say, yep. And it's going to be a vendor. So we're going to say vendor. That's what we want. And we're going to put the amount of 18,000. It's in the payment side this time. And the amount it's going to go to, what's it going to go to, what account? If we select the drop down, there it is, we actually have that one. Furniture and equipment, that's where we're going to put it. And tab, and if we hit enter, we got to hit enter to be on the next line to make sure QuickBooks records it like so. And then if we go to the trial balance, we can see that we now have 32,000 in the check-in. And we have furniture and equipment of the 18 and the owner's equity of the 50. If we want to see the detail, the general ledger pretty much of these, we double click and we can see the information here where we had the 50,000 entered, the 18,000 that we spent, bringing us to the 32. Notice it doesn't call it the general ledger, but this is a general ledger in essence, because that's the same thing as what we have here. We have the 32,000 on our trial balance. We've got the 50, the 18, and the 32 in the general ledger in order by date. So it's going to be, in essence, the same thing. Again, I don't expect you to really be doing the QuickBooks, but it's good to just see how the two things tie together, how they relate to each other. All right, so then we're going to do the next activity here. So we're going to go back to Excel. I'm going to put the next date, which is going to be 5/6, I believe. Pull up what we have. I'm going to make this one green, saying that we have completed that. That one is done. Next, we paid cash for 6 months of rent to Best Rentals Company. All right, so is cash affected? And once again, we're going to say, yeah, we paid cash. Anytime it says paid cash, we paid cash. And therefore, cash has a debit balance. We need to make it go down. Therefore, we're going to do the opposite thing to it. And notice, before I think about anything else in the problem, if it says paid cash, That's what we can do. We can do that right away. We don't need to even understand anything else, right? So we're going to say, yeah, cash is going down. I'm going to copy that. I'm going to put that on the bottom because credits generally go on the bottom just out of tradition. So there's the credit, and the amount was 12,000. We're representing credits with a negative 12,000, and then we're going to debit something for 12,000 like so, and the debit is going to go to what? What did we pay for? Rent. Now you're probably thinking rent's an expense. It should be rent expense. But note we prepaid it. We prepaid 6 months of rent. What would happen to your income statement if you expensed 6 months of rent today and you tried to see how you did this month compared to next month? Your rent, your net income this month would be way lower than it would be next month, even though you're really paying the same rent each month. You just prepaid it. So from an accrual standpoint, we really want to put it on as an asset until we consume it by using it. So we're going to put it on as an asset. So we already know it's going to be a debit. It's going to be prepaid rent, and it's going to be a debit because we have to debit it because we credited cash. Let's think it through though. Prepaid rent's an asset. It's going up. Assets have debit balances. Therefore, we're going to do the same thing to it, which in this case will be a debit. So I'm going to copy that. I'm going to paste it 1, 2, 3 there. And then we're going to post this out. Remember, this is the general journal. We're posting it to the general ledger. We're going to post the debit first. It's the third account down or the fourth account down on the trial balance. It will be the fourth account down on the general ledger. So here's prepaid insurance. It's going to be down here. So it's an S26. Again, I could type it in there, but I want to use formula. So I'm going to say equals. I'm going to use my scroll bar. I'm going to scroll over, scroll up, and we want that 12,000 right there, and enter. So there's that. Now we're out of balance. So here it is here on the trial balance. And now we need to post the cash. So cash is going to be over here in P11. So this is cell P11 in Excel. And we're going to say that equals and point to the cash of 12,000 and enter. That brings the 32,000 balance down by 12 to 20. Cash being a debit balance, a credit being the opposite thing to it, making it go down. All right, let's post this same thing into QuickBooks. Again, we paid cash, so I'm going to do as much as we can with just the check register, and the date of this was 5/6. And we're going to say I'm just going to keep the same check number, and we're going to pay it to now we need to know who the rental company was, and we called it Best Rentals. Very clever. All right, so that's going to be that, and we're going to say quick add. It's going to be a vendor. That is correct. QuickBooks is correct on that guess. 12,000, and then we got to put it into the account, and QuickBooks may not have the account. We may need to set it up. And in order to set it up, it's really easy. We could just type it in there, and we're going to say it's going to be prepaid rent tab. And QuickBooks says, well, I don't see prepaid rent. Do you want us to set it up? And we go, yeah, I want you to set it up. And notice this is where most people will make a mistake because it's going to go to the expense by default. QuickBooks guessing that if we're paying something, it's an expense. But in this case, it's not. It's a prepaid asset. Therefore, we have to change this to asset, other current asset in this case, and save and close, and then enter. So let's see what that does. If we go over to the trial balance and refresh it, we see that we have the 20,000 now in the cash, and we see the prepaid rent. There it is. Now, if we put it into rent expense, we'd still be in balance. It wouldn't. QuickBooks would still make it work, but it's just that the expense would be in there instead of an asset, and it's kind of a timing difference, a misappropriation. It will work itself out in the long run, but that's just one of those things that we kind of need to know in order to set the thing up. So I'm not expecting us to really understand the setup on QuickBooks now, but those are some of the things that we just kind of need to understand when we're putting the data into QuickBooks. So we see the same information here on our trial balance that we just saw on the trial balance in QuickBooks, and we can continue to the next one. Hopefully it's the same. I'm hoping it's the same. We didn't make any mistakes so far. Next one's going to be on 5/9. So we're going to say 5/9. See what we have. I'm going to go ahead and highlight this one, and we're saying that one is done. Let's make this a bit larger. Okay, so we paid cash for 12-month liability insurance plan. Okay, so it's $2,400. And again, before we even know what liability insurance, I can say, oh, we paid cash. Well, is cash affected then? Yeah, cash is affected, and it went down. Cash has a debit balance. We're going to make it go down. How do we make something go down? We do the opposite thing to it, which in this case would be a credit. So I'm going to go ahead and copy cash. I'm going to copy that. I'm going to put it on the bottom. There's the date. I'm going to put it in cell C15. C15, it's right there. We're going to right click and paste it 1, 2, 3. All right, and then the amount we're going to put in the credit side in E15. I'm going to put it in there with a negative to represent the credit for our worksheet. 2400 is the credit. And then we're going to need to debit something. So we're in the debit side, and we're going to need to debit something for 2400 as well. Okay, so now we just need to know what that will be. What did we purchase? We purchased insurance. So insurance, then, you would probably think, well, that should be an expense as well. It's insurance expense. But it's actually going to be in the asset section for the same reason that the prepaid rent is going to be in the asset section. That is because we haven't yet consumed it. By definition, when we buy the insurance, say we bought car insurance, we can't get in an accident and then buy car insurance. We got to buy the car insurance before we get in the accident. Therefore, we're going to have to put it into the asset account of prepaid insurance. So it's actually going to be up here. If you have a trial balance in front of you, it really helps to look through that and see where that's going to go. We already know it's going to be a debit because we credited cash. It's already a debit. We already wrote that in there. Let's think that through, see if it makes sense. Prepaid insurance is up in the assets section. Prepaid insurance needs to go up. Therefore, we're going to do the same thing to it, which in this case will be another debit. So I'm going to copy that, and we're going to put it in cell C14 and right-click, paste it 1, 2, 3. Right-click and paste it values only. There is that. There's the journal entry, and I'm going to go ahead and format this to make it nice. And we're going to go to the Home tab, Alignment, and increase the indenting. Now we can post the journal entry to the general ledger, posting prepaid insurance first. Prepaid insurance on the trial balance is 1, 2, 3, 4, 5 accounts down. It will then be the same on the general ledger. Therefore, we're going to go 1, 2, 3, 4, 5 accounts, prepaid insurance in cell W9. W9 sounds like a tax form here. And we're going to debit that equals. I'm going to scroll back over. I'm going to do this with a formula. We could type it in there, but I highly recommend formulas. And enter. All right, and if you're joining this recently, note that there's going to be a worksheet down below. You can work through the worksheet in terms of Google Sheets, as well as an Excel sheet, as well as QuickBooks are all free during the presentation. If you work it after the presentation, then let us know, email us, and we'll take a look and see if we can give you the worksheet at a later time. If you're jumping into this at a certain point and you're looking through the transactions, you could still get the same information from the journal entries as to how the journal entries are going to balance. And we're trying to relate the journal entries both in terms of the theory as well as in QuickBooks at the same time, so we can see how those two things apply out as we go. All right, so now we're out of balance because we posted the debit and not the credit, indicated by these red items here. And so now we're going to post the credit going to cash. So we're going to go to our general ledger. Here's the cash. We're in P12. There's P12 equals. We're going to point to this 2,400. What's going to happen when we hit enter? Cash is a debit balance with 20,000 in it. We're doing the opposite thing to it, a credit. The opposite thing will make it go down. 20,000 going down by the 2004 to the 17,600. That 17,600 in the general ledger being represented as well in the trial balance, also in balance because the debits less the credits equal 0. No effect on net income at this point. Accounting equation remains in balance. We're going to do the same thing in QuickBooks now. And again, I don't expect you to have QuickBooks, but we just want to see how this stuff really applies to QuickBooks as well, even though data input into QuickBooks does not generally include, oftentimes, knowing debits and credits for the basic data input, but QuickBooks uses debits and credits. Okay, so now we're going to go back here. We're going to go to The checking account, everything is as much as possible we'll put into the checking account. The date on this one's going to be 5/9, and we're going to say it's the same check. We're going to say this is the check number, and we're going to put it in there. Who did we pay? It's going to be another very original name, I'm sure. Liability Insurers. That's our insurance company. All right. That's the name of the insurance company. Okay, so we're going to quick add. It's going to be a vendor. So we're going to say that's a vendor. And the amount's going to be $2,400. Is that right? Yeah, $2,400. And now we need to put the account. And again, if we hit the drop down and say, I don't see an account, I don't see prepaid insurance there. So we'll just make one by typing it. Prepaid insurance. Okay, and I'm going to quick add that. And this is another area where QuickBooks is going to get it wrong if we just go with QuickBooks. Because QuickBooks thinks it's an expense by default, but it's not. It's an asset. And so we're going to have to fix that. We're going to put it to the other current asset in this case. And we're going to save and close and enter. And enter. Now let's see what it does. If we go to the trial balance, we can see what it does. If we refresh the trial balance, we have the cash. We have the prepaid insurance, the prepaid rent. And if I spell some things wrong, I apologize for that. But we've got the furniture and fixture and the owner's capital. What would have happened if we put prepaid insurance as an expense? It would be down here as an expense. And the only difference is we would be in balance, but there'd be a timing difference that we'd kind of have to deal with on a cash basis versus basically an accrual basis. That's the type of issue we would have with that timing difference. If we want to see the activity, such as for cash, we can double click, drill down on it, and here's the activity. Here's the GL. QuickBooks calls it a transaction by account, but that's basically the GL, the general ledger. Now, if I close this out and we go to the balance sheet, the other account, the thing that most people look at, most people don't look at a trial balance. So they're going to say, except for us accountants, so we're going to say that the assets are going to be up top, and we see the total assets here equal total liabilities plus equity, same information. How about we take a look at the income statement, which QuickBooks calls a profit and loss for some reason, but it's in an income statement too, or you can call it either one, but we just have nothing in there yet. If we put the expense in there, we would have an expense in there, but in reality, on an accrual basis, we do not yet have an expense. We haven't yet consumed it. All right, and so then we're going to have that same information in our system over here, same accounts hopefully here, unless we did something wrong, and we could see the same GL activity over there. All right, next transaction we're going to have here is going to be on 5/12. And let's see what happens on 5/12. It's going to be something very exciting, I'm sure. So I'm going to highlight that, saying we completed that one. Cash from clients for work done at the same point in time. So what I'm trying to say here, what the book is trying to say here is we did work and we got money at the same point in time. Now, in real life, that would be obvious. Obviously, if we did bookkeeping and someone came in and we did bookkeeping or something and they paid us at that same point in time, we would know that. But in a book problem, we kind of have to define that. We have to say, when was the work done and when was the amount paid? So those are going to be some things that are kind of tricky in terms of a book problem that would be obvious in real life. So we got paid and the work was done at the same time. Service company, we're not dealing with inventory. Therefore, is cash affected? Yeah, we got cash from the client. Again, we don't need to know anything else. We said cash from client. We can hit cash first. Cash is an asset. Assets have debit balances. We got more of it. It needs then to go up. And how do you make something go up? You do the same thing to it. So it's a debit. Therefore, we're going to debit it in order to make it go up, doing the same thing to it. So I'm going to copy that. I'm going to go down here and cell C17. C17, it's right here. Right click and paste it 1, 2, 3. All right, and the amount then will be 3,600 and D17. We're going to put the same amount in the credit side in E18, negative 3600. And now we just need to know what the account will be. Now, why are people paying us money? Because we did work and therefore earned the money. So we're going to represent the account that represents us earning money. That's going to be revenue or income. Revenue or income, we already know it's a credit because we debited cash. Let's think that through now. Does that make sense? Revenue or income is a credit balance account, and we're going to make it go up by doing the same thing, by crediting it. So revenue is always going to be a credit, and it's always going to go up except for some rare circumstances. But for the most part, revenue is always going up. So I'm going to copy that. I'm going to put it over here in C18, right click and paste it 1, 2, 3. And then we will indent that. All right. So that's what we have here. And now we can post that out. I'm going to take a quick break here. Next comic as we do that. All right, so let's see what else we have here. So now we're going to post this out. So we have the general ledger. Now we're going to go ahead and post, well, this is the general journal, and now we're going to post the general journal to the general ledger. All right, so cash first. Cash is going to be our top account on the general ledger over here in O13. That's where we will post it. We're going to say this equals and scroll over here to D17 and enter. So there's that. And now we're out of balance by that 3.6, of course. And now we're going to post the other side of it, which is going to be the revenue or income side of it. And I'm going to scroll over here. It's going to be in the same order. Notice it's our first dark blue account. So it's going to be the first dark blue account on this side as well. So we're going to scroll over. First dark blue account is going to be down here a bit. And it's going to be in the credit side. So I'm on the credit side. Again, I could type in -3600, but I want to use formulas. I know you got to change the screen to do that, but it's well worth it to practice. I'm going to slide this over and point to that 3600 and enter. And there we have that information. It goes from 0 up in the debit direction, not down in the negative. It's a negative number for Excel, but for debits and credits, it's going up in the credit direction. And that's one, of course, of the confusing things we have to consider when we do these things. Okay, so that puts us back in balance over here. We can see that that 3.6 is also here on the trial balance. And now we are going to do the same thing in QuickBooks. So I'm going to go to QuickBooks and we're going to do the same thing. I'm going to do as much as possible in the checking account as we can. So this happened on 5/12, and I'm going to label it just deposit. And we got it from, I'm going to go back over here, our client, which is J. Smith. All right. That's who paid us. That's good. And we're going to quick add. And again, every transaction for QuickBooks, they're going to try to guess it's a vendor, but for here it's a customer. We have a customer paid us. And it's not going to be a payment this time. It's going to be a deposit of 3.6. Then we just need to assign the other account. If we select the drop down, we don't have a revenue account yet. I'm going to select it by going, I'm going to call it the same thing. I'm going to say it's going to be revenue or income, just emphasizing the fact that those are the same thing. It's a revenue or income type of account. I'm going to go here and put that in, select tab. QuickBooks says we don't have that account. You want to set it up? Yes, we do. And once again, QuickBooks thinks it's an expense, just like every account we set up in the check register. We're going to make it an income account. It's going to be an income account. And notice that we can call it whatever we want, depending on what we do. Like a lot of books will call it as fees, because if we do bookkeeping, we might call it fees, that we charge fees. But as long as it's a revenue or income account, it will be in the income statement as in the proper area. So we're going to say, all right, save that and post that. And then if we go to our trial balance, we can see that it then populates. So here's our cash went up as well as our income went up in the credit direction. Most people, of course, will be looking at the balance sheet, and we can see that the cash was affected here. What's the other account affected on the balance sheet? It's the equity area. And right here, they actually break out income separate on the balance sheet, which is a little bit different, again, from QuickBooks to other areas. But we can see that it's part of the equity section in order for our assets to equal liabilities plus equity. And on the profit and loss, the income statement, we're going to say that we have revenue of this 3.6, no expenses yet. That's what we have. Note on a trial balance, we can see the same thing just really easily. If you look at a trial balance, and again, if you use the credits as negatives, you can kind of see everything really pretty quickly just in a trial balance. We can just highlight these and say, what does that add up to? Total assets, 53,600. QuickBooks will, Excel will just add it up if we highlight it. How about our capital, 50,000? What about our net income? We've got revenue minus expenses, 3,600, represented by this number here. So we can get that information really quickly by just doing that. If we want to see, do assets equal liabilities plus equity? Well, assets, the green accounts, liabilities, we don't have any, equities, all the blue accounts, 50,000 and the 3.6. So yeah, that's going to be in balance as well. All right, let's see what else we got. We got just a couple more. The next one's going to be on 515. So on 515, we're going to say that, I'm going to highlight this. We're going to make that green. Next item here is going to be purchase of supplies on account, no cash paid. All right, so now we purchased supplies and we're going to ask our first question, is cash affected? And in this case, no, it says no cash was paid. How did we get the supplies then? We bought it on account, or we bought it by credit card. Again, this is an area where the book problem, it might be a little bit more deceiving than we would do in real life. In real life, we would know we didn't pay cash, we put it on account. We paid it with a credit card or something. In a book problem, it has to tell you that somehow, and it might just say on account. We purchased supplies on account. That means that we didn't pay cash for it. It means we bought it with something else. And it means that we're going to hit accounts payable. That's the account we're going to use when you're working problems like this. It's going to be a liability account. So usually in problems like this, even though I know it's going to accounts payable, I'll think about what we got first because it's easier to think about the debit and credit, and I'll show you why. What did we get? Supplies. Now, if you go through this, our chart of accounts, you might say, well, that should be an expense. But in the same reasoning that we've talked about with prepaid insurance and the equipment, the supplies hasn't been consumed yet. So we're actually going to put it on as an asset, and then we're going to expense it as we consume it. Now, of course, if we bought like staples or something like that, I'm not going to count the staples, and even if we bought a year's worth, even though that would be proper accrual. Why? Because it wouldn't be worth our time to do that. But if we bought like computer ink or a lot of paper or something like that, we would want to track it. Therefore, we would want to put it on as an asset. We'd want to count it. We want to see if we're losing supplies, if there's any type of shrinkage of supplies. Therefore, we're going to put it on as an asset. Asset, like cash, has a debit balance. We got more of it. Therefore, we need to make it go up. It might be easier for us to analyze the asset. So I'm going to copy that, put that on top. It needs to go up. It's going to go up by 1,200. Then we're going to credit something. We know we're going to credit it because we debited the other account. And what will that be? We're not paying cash. We're not going to credit cash, which would decrease cash. We're going to credit the liability. Now, we know it's a credit. Does that make sense? Liabilities, those are they have credit balance accounts. The bad thing is going up, meaning kind of like our credit card balance is going up. How do we make something go up? We do the same thing to it as what it is, which in this case is another credit. So I'm going to copy that. We're going to put it in cell C21 and paste it to 1, 2, 3. Now I'm going to put my cell cursor here again, go to the Home tab, Alignment, Increase Indenting, and then we'll post this out. So we're going to post the supplies first. So if we go over here, it's going to be the third account down. Therefore, it will be the third account on the general ledger. So here's supplies, third account. We're in cell S20. We're going to say this equals, and then point to this 1,200 and enter. So now we're out of balance by that 1,200. We're going to post the credit 1,200. That's the first orange account, which will be the first liability account on the trial balance. Same thing as on the general ledger. Scrolling over to the accounts payable in cell AB9. So we're in cell AB9. We're going to say that that equals. Again, I'm going to scroll back over and point to that 1,200 and enter. So now we have this going up in the credit direction. That's not going down in a hole. That means it's a credit for purposes of debits and credits. And over here, we can see that same number in terms of the 1,200, and we are back in balance. Let's put that same information into QuickBooks. This one's a little bit tougher because we cannot put it into the checking account. And again, I don't expect everybody to be putting it into QuickBooks, but this is just to give an idea of what QuickBooks would look like, how we would put the same information, how debits and credits are the same thing in QuickBooks as in Excel. So how are we going to put the information into QuickBooks if we can't put it in the check register? We can't put it in the check register because by definition, the check register deals with cash. So typically we do this by forms. So we could say that this is going to be basically something we're paying to a vendor. So under the vendor section, we're going to pay enter bill or select enter bill. And this is, instead of using journal entries, QuickBooks usually tries to use forms because that's easier for other people to enter data into without knowing debits and credits. We could enter journal entries in here. I could have done this whole thing by entering journal entries with company and then go down to general journal, make general journals, and do the whole thing with journal entries. But we want to do it with forms here to kind of see what people generally do in this software. And generally people use either the check register and or forms. So we're going to put the information into here. So who did we pay? Who did we pay? Office Depot. Okay. So I'm going to put that there. Tab, quick add. And it's going to just assume it's a vendor. I'm not going to put any other information right now in terms of terms. We can talk about that later when we talk more about QuickBooks. But what we do need is another account. Now, what the bill means by definition of it being a bill as defined by QuickBooks, is that it's going to make accounts payable go up. That's what a bill is. Then we need to select the other account. So a bill is going to credit accounts payable. What's the debit going to be? That's what we need to put in place. If we select the drop down, we don't see supplies. Therefore, I'm going to type in supplies and select tab, and we're going to say set up. Again, it thinks it's going to be an expense, but in this case, supplies is an asset. So it's an other current asset. So I'm going to go to other current asset there and continue. And this is just the same information, other current assets, and save and close, and save and close. So again, the bill means credit to accounts payable. Then we select the other account just as we did in the check register, and we save and close it, and that will be the debit and the credit that we can now see reported on the trial balance, which would be the accounts payable. Well, the accounts payable shows a 0 there. What happened? Let's see. I didn't put an amount in it. That's kind of important. All right, we're going to put the amount of 1,200 and then save and close it. All right. There we have it. So there's the 1,200 there, and in the accounts payable, and we have the supplies of the 1,200, and we can see that information, of course, on the balance sheet. Same information. There's the 1,200 on the balance sheet. And if we look at the profit and loss, we're still only left with that 3,006 because we haven't consumed the supplies yet. It's not on the income statement until we expense it. All right, we're getting down to the last couple here, last two, and then we have to stop. It's because we're going to be done with all the transactions. So I'm going to highlight this. We're going to make it green. Now we're on 518, record services provided, but for which cash has not been received. So now we did work. If we did bookkeeping, we did work. But when we ask the question, is cash affected? No, we did work, but we didn't get the cash yet. Therefore, what are we going to put the money into other than cash? Now, when we think about this, we're going to say, okay, we didn't get cash even though we did work yet. Did we get something? The argument from an accrual basis is yes, we got something. What did we get? An IOU. That IOU is an accounts receivable account. Now, this usually bothers people when we first start thinking about this, an accounts receivable being reported on the books as an asset, because they think, well, we haven't got the cash yet. It's risky for us to put the receivable on the books and tell people we have it as an asset when we haven't got the cash yet. But note that that's what receivable means. It means that, look, we did work, we earned it, and we don't have it yet. You know, we're telling the reader that we expect to receive this money and we don't have it yet. If the reader wants to discount that information and say it's not worth the same amount, or we're not going to count that in our calculation, they can see that. Also note that under the accrual basis, we are going to have to estimate how much of those receivables we do believe are not going to be collectible, and we'll talk about that at a later time. But there is generally value, just as we would have value if you went to work and were a W-2 employee. If you got paid Friday and you earned the wages on Monday, even if you were, even if you left the job and didn't, come back on Tuesday, you could still say, hey, I have money owed me for that Monday's worth of work, and be pretty dependable that you would get paid on that. If we agree that if we shake hands in a similar way in a business transaction and we do work, we can have some assurance that we're going to receive it. That's going to be an asset. So in any case, accounts receivable is an asset. It has a debit balance. We need to make it go up. We got more of it. We got more IOUs. Therefore, we're going to do the same thing to it, which in this case is another debit. I'm going to put it on top in cell C23 on 518. We will credit then, well, let's put the numbers in. 25, crediting 25. I'm going to do that with a formula now just to start practicing formulas. You could just type in -2500 as well. And then we just need to know what account it's going to go to. Why are people going to pay us $2,500? Because we did work. And what account do we report when we do work? Under the revenue recognition principle and accrual principle, that would be revenue or income. So in cell L417, I'm going to copy that. I'm going to put that on the bottom in cell C24, paste it 1, 2, 3. Then we're going to go to the Home tab, Alignment, and indent that. And then we're going to post this out. So I'm going to go to the receivables, and that's going to be the second account. So there's receivables in S9 equals, and then we're going to point to that 2,500 and enter. Then we're going to go to the revenue account. It's all the way, it's the first dark blue account on the trial balance. It will be then the same on the general ledger. So we're going to go over here to revenue. Has a credit in it already. I'm in AF20 for Excel. That equals, I'm going to scroll back over here, the 2,500 and enter. So notice it made this account go up, not down. It's not going into a hole. This is revenue. It's a credit of 3,600. It's going up by doing the same thing to it to 6,100. We could see that 6,100 on the trial balance, back in balance with the green zeros. Now we're going to post that same thing to QuickBooks, and we have the same problem. I can't go to the check register and put it there because we did not get any cash for this transaction. The form that we usually use for QuickBooks is going to be called an invoice. Invoice is what happens when we usually want to affect accounts receivable. We could use other types of documents, but that's typically how we'll set things up to be used. We're going to go to the customers section because we're dealing with customers when we deal with invoices. Invoices being kind of like a bill, our bill. It's our bill to our clients. I'm going to make this a little larger. And so we're going to say here's going to be our client will be then, who's our client? L. Williams. And we're going to paste that here, tab, and we're going to quick add. It's going to go to the customers, going to keep the invoice number, and the item, we have to add an item. I'm just going to call it books. We did books, and yes, and it's going to be a service item we're going to have here. We're not selling inventory is what that means, and we just need a rate in order to make this work. I'm not going to fill out any more detail than we have to at this point, and actually I don't even need a rate. I need another account. If the rate would be like a billing rate, if we have an hourly rate, or a rate for inventory, or if we were doing some other format of billing process. The account, however, needs to be income that we're going to here. So income is going to be revenue and expense. All right, so once that's set up, you don't have to set it up every time, but if it were set up, and again, I don't expect us to go through that, we'll do that more at a later time, get into more detail on that, but usually when people just have to enter data for work that was done, if they're billing the client, if they're working in the receivable department, we would just enter an invoice, and then we would say that they owe us $2,500 for that invoice. The invoice itself means that we're debiting accounts receivable and crediting revenue. That's what the invoice basically means, unless it'll mean a bit more if we sell inventory, because then we'll have to deal with inventory. But we're in a service company right now. We're going to save it and close it, and let's see what that does to our trial balance. So here we have it. So no cash is affected, but now we have this receivable of $2,500 and revenue was impacted. If we look at our balance sheet, we can also see that we have that receivable up top, and we're still in balance with the assets equaling the liabilities and the equity. And if we look at the profit and loss, we can see that we now have the 6,100. If we want to see detail on that, we double click on it, and we could see that we had the one deposit and we had the one receivable happening here. So that's the activity. All right, so let's do one more transaction. I'm going to make this green. We have completed that. Next transaction will be 521 paid vendor for part of the debt incurred in the prior purchase. So now we paid the vendor. Again, before we read anything else, we could just say, is cash affected? And whenever it says paid, we're going to say, yeah, cash went down, right? So I could say, okay, cash has a debit balance. I know we paid someone something. It needs to go down. How do I make it go down? We do the opposite thing to it, which in this case would be a credit. So I'm going to copy cash. I'm going to put it on the bottom of the date, which is 5/21, and we paid 400. Now we're going to debit something 400, and now we need to know why we paid the cash here. So why did we pay the cash? Because we're paying the vendor for a prior purchase. So we purchased something, and remember it was supplies that we purchased from Office Depot, but we purchased it on account. Now we're not going to put it to supplies because we already have the supplies on the books. We're not going to debit supplies again. What we're going to do is reduce the liability. So that liability is payables, kind of like if we owed a credit card. So we have the 1,200 there in payables, and we know we're going to debit it because we credited cash, and it answers that question for us. But does it make sense? Let's think it through. Accounts payable has a credit balance. We need to make it go down because we don't owe 12,000 anymore, 1,200 anymore. We owe 400 less of that. How do we make something go down? We do the opposite thing to it, which in this case would be a debit. So it does make sense that we're going to debit this. I'm going to copy, I'm going to paste that down here. I'm going to indent this to make it look nice. Home tab, alignment, increase indent, and then we'll post this out. So I'm going to go up to accounts payable, which is the first liability account. On the trial balance, it will be the same on the general ledger. There it is in AB10. That equals, and then I'm going to scroll back over, scroll back down to accounts payable. And what does it do? Accounts payable has a credit balance. We did the opposite thing to it, making it go down to 800. So it's not going less in the hole, it's going down. The credits are decreasing from 1,200 by 400 to 800. All right, and that puts us out of balance by 400 until we post the cash side of it, which we will do on the general ledger over here in P14. That equals this 400. Enter, puts us back in balance there. Let's do this one last transaction in QuickBooks. This one does affect cash, so I could go into the checking account and do it. Note that oftentimes when we do this, we would go to vendors and go to pay bills, right? We would say we're paying this bill and then write the check for it. But I just want to keep doing everything in the check register that I can do in the check register just to show you all the cash transactions that we have. So I'm going to go 521. There we go. And we paid the person here being Office Depot. And we're going to say quick add vendor. And this will be a deposit. And the account will be accounts payable. Now, normally if we have accounts payable, QuickBooks will not let us post it unless we name the vendor, because QuickBooks wants to track who we owe. And if we don't put the vendor in there, we won't be able to track that. And that's one of the things that if we don't understand that, QuickBooks won't let us post things, and it really frustrates us at times, right? So if I don't have a customer or vendor there and I say record this, QuickBooks says, well, first it says your transaction is not in the right date, but that's okay. Oh, it let me do it. I didn't think it would. Oh, it added it for us. That's our only vendor, and we put it up here. So basically it added that. If we didn't have that there and we tried to record it, we're going to say that it won't let us record something to accounts payable without a customer or vendor. and we have to type in the customer or vendor so that it can track that information. And okay, that will be the same with the accounts receivable accounts as well. As anytime we have an accounts receivable, we have to have a customer in order to make it work. Okay, so again, what we're doing here in terms of this problem is working the basic transactions in terms of Excel and Google, and then putting that same information into QuickBooks, trying to get an idea that QuickBooks is doing the same thing in the theory in Excel, and trying to get an idea both from a small business standpoint that usually works with QuickBooks, but not with journal entries, that the journal entries are necessary to a degree to really understand how to set up the basic information in QuickBooks, and to understand from a student standpoint who also often have to learn a lot of theory without really seeing how it applies to QuickBooks, how we can have those two things match up. We want to show the students that, hey, this stuff does apply within the QuickBooks. So we can see here that if we looked at the QuickBooks and we go to the trial balance now, of course, this is what we have in the trial balance. This mainly was generated just by entering stuff into the check register with a couple things that were non-cash related and adding accounts. And we have the trial balance here. If we want to drill down on anything, we can double click on it. There's the activity. This is a general ledger. That's basically a general ledger. They call it a transaction by account. It's a general ledger, so QuickBooks will have slightly different names, but that is this information. That's the same information, of course, that we have here, hopefully, unless we messed anything up. But we have the same information here. And again, the trial balance is enough to tell us most things. I can see the trial balance. I can highlight these and say there's assets, 56,900. There's liabilities. We have liabilities of 800. There's the income statement. We have income, debits minus credits, 6,100 of income. We can see that same information in QuickBooks, which will generate it automatically if we enter the data properly by just saying, if we go to the forms that people normally look at, which is the balance sheet, rather than the trial balance, we can see that, okay, here's our cash, here's our accounts receivable, here's our information here, here's our total assets, that's 1,006 we owe, here's our equity, and QuickBooks breaks out the net income too. So total equity is that 56,100, assets equal liabilities plus equity. If we look at the profit and loss, same information. All we have is that 6,100 of income at this point. So we can see that our information here will tie out what we're doing in theory. Is the same thing that's going to be basically that will be worked in QuickBooks. If you have been working this with us, or if you want to see this information and work this problem, it's available during the presentation. During the presentation below this, there's going to be a link that you can download the Excel worksheet, and then I'll see if we can post this and you can rework this problem. There's also a link to a Google Sheets. If you do not have Excel, or even if you have Excel, it's really nice to learn Google Sheets as well, and it takes less memory a lot of times, and you can do Google Sheets while you're in different locations and on different devices. Oftentimes it doesn't have as much functionality, but it's got more flexibility in some ways. So you also have that. You can download the Google Sheets and you can try to work it in there as well. I know that not everybody has QuickBooks. The QuickBooks right now is just designed mainly to give you an idea of how this stuff does apply to computer software, what you need to know with computer software, and what the computer software will do for you once we start working with computer software. Next time, we're going to go through and do some more journal entries, and we'll start from this point in time. So I'll give you some more Excel worksheets that'll be available during the presentation, and you could just start from this point. If you missed this or you don't totally get all this, we're just going to start from the same point forward. You don't need to have done this if you don't have it done, but if you have had it done, that would make things easier as well. And then we'll go forward from there, and we'll do the adjusting process. We'll do the financial statements, and we'll do the closing processes. These tabs aren't on the current worksheet that has been uploaded. I'll include those in later worksheets, and we'll work through those and see how those relate to the debits and credits in terms of theory, in terms of just doing it by hand, by Excel, and then doing it by QuickBooks at a later point in time. And again, if you want these resources after the instructional video is done, then let us know, and we'll see if we can put those together. Provide us with your email address, and we'll see if we can send those out. So that's going to be it here. Here's the last comic as we wrap things up, and we'll close this out.